Matt, very good to see you. We have a really important topic today. Should retirees include Bitcoin in their retirement portfolio? Fidelity recently published this white paper titled The Case for Bitcoin. And I want to talk through that paper, considering Bitcoin right now is trading about 62,000 off of its recent high, which was around 70,000. So, Matt, I want to start though. Can you explain the halving that recently happened with the cryptocurrency?
Yes, every 4 years, they reduce the amount of Bitcoin that are released into the market by half. And we just went through that. And some people were expecting the market just to take off after that. But when you look at the data, it's usually about a year after the halving to where we see the big jump in the market.
I see. Okay, some people do believe the halving could push the price higher. So let's circle back to the argument that the Fidelity paper presents. And let's take a look at these numbers. There are a lot of them. They say that a 2% allocation to Bitcoin could allow for an increase in annual spending ranging from 1 to 4% and potential losses of up to negative 1% in a worst case scenario. Now, here with these numbers, a 5% Bitcoin allocation could allow for an increase in annual spending by as much as 9.5% for older investors, but with much steeper potential losses of up to 3% in a worst case scenario. Considering those numbers, Matt, do you think a retiree or pre retiree should incorporate Bitcoin in their retirement portfolio?
I think it's up to them and their risk tolerance. Some people are all for it, some people are not. We're not here to encourage people to do something that they have no desire to do at all. But most people are open to our advice. And I think it's something that should be considered as it's the first asset class that's been brought into the market or first new asset class in decades. And it's just another tool to diversify your portfolio. There are some people out there that say that it's too new and too newfangled, whatever you want to call it. But the technology actually goes back to the 90s as far as the programming.
Mhm. So we do see ETFs as being less risky, and Bitcoin recently gained more than 50%. That was back in April, as money flowed into new spot ETFs. Are those ETFs less risky than directly owning Bitcoin?
I think well, twofold. As far as risk in owning Bitcoin, there's numerous ways you can get Bitcoin or other cryptocurrency. You can go to exchanges like Coinbase, or there's a dozen of them. When you buy that, you're on your own, and there's the risk of the wallet being exposed or stolen, if you will. It's a risk of being hacked, right? When you own it in a traditional custodian, like we use Charles Schwab or Fidelity as our custodian, there's certain guarantee protection factors as far as security is concerned. Now, there's no guarantee of no risk of loss, of course. I'm talking about being hacked. So there's more security in that regard, and we're using trusted custodians. It's, in my opinion, a better way to own it for most people, especially when you own it in an IRA, because if you're buying and selling on Coinbase or whatever other custodian you're using, every time you buy and sell, that can create a taxable event. When you're doing it in your IRA, we don't do that.
hmm Okay, so I should mention, of course, we will link to this Fidelity white paper for anybody who wants to read it on their own. But Matt, how should investors evaluate the role of Bitcoin in terms of diversification, risk management, and their own unique retirement goals?
Each person has their own risk tolerance. We're here to work with you in light of that. And as far as allocation, it's hard to make a case that 1% is going to make or break you. But as that study shows, 1% allocation can be beneficial over time.
And you have a special designation when it comes to Bitcoin?
Yes, it's called the CBDA. And it's the only designation approved by the SEC that has to do with blockchain technology.
Interesting. Congrats on that. So clearly, I think, Matt, people are going to have questions about this. How can they reach you?
Best way is by phone, 425-256-3105.
All right. Matt, thank you.
Thanks, Aaron.